break. It'll be 20, 30 seconds. We'll be right back. Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering 30% off of your final subscription. If you're interested in giving it a shot, there's no risk, why not? Use the link down below and the promo code there, A1Trading30 for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below. All right, guys, and we are back with Chris Pulver. Hey, Chris, how's it going, man?
What's happening, Nick? Happy Monday, man.
Happy Monday. Hey, so Frank is not with us the next 2 weeks. He's actually traveling Europe like an absolute.
Yes.
And we requested that he send us some pictures because we knew people were going to say, hey, where's Frank? He just sent me a text. I just pulled this up. Made it to Rome. So he's standing by the Colosseum.
Oh, boy.
I think it's fair to say he's got a cooler day than us today. So
he definitely does. I mean, he's going to have a cooler 2 weeks than us.
Yeah, I mean, it's so right now it's like 9:30 when he sends me this, and he's still on US time because he just pulled in. Man's got a beer in his hand. So he is,
there you go.
That is just in the European spirit. Absolutely love it. And now on to the main event, Chris. He's not here for it. I'm going to miss Frank on this topic because this is, oh my gosh, GameStop's up 110%. Chris, we're all in short, right?
Honestly, it's not even on my radar. I heard you and I have been talking about it this morning. It's just like, good for GameStop, good for Roaring Kitty coming out of his shadow. Like, I mean, what do you do with it, man? Let me take a look at it here. I'm closing up one more trade.
Okay. Yeah, no rush. I'll give an updated take while you're finishing up on your stuff. So GameStop up 110%. Roaring Kitty coming back to the center stage. And is this, but barring GameStop for a second, is this potentially the start of euphoria again? You want
to know why the stock's up, to be honest?
Why?
It's because I bought a PlayStation 5 yesterday from GameStop. That's what happened.
Did you really, Chris?
Yeah.
Chris, see, no offense, but you and I are a little older than the average, perhaps person. Well, I'm not that old, but you and I,
I am. Yeah.
Chris is old. No, I'm kidding. But we both remember the days of GameStop, and so did Chandler and James. We all remember those days of going to GameStop. But I guess there is a crowd of us that still, I used to still stop in every once in a while at the mall just to see what was going on there. But you just bought a game for a PlayStation?
Well, so I literally play one game. I play Fortnite with some buddies on Friday, and I've had a PlayStation 4 for a long, long time. But my nephew, who's a freshman in college, there's a game out right now for PlayStation 5 and PC only, and it's called Helldivers 2. And I played it for quite a bit yesterday, like probably 5 hours worth. Is that a sparing applause in the background?
Yep, Chandler. James is the soundboard, and it's dangerous. You got to stay on James's good side because otherwise he starts using my voice and it's awful.
If anybody in the office knows about Helldivers 2, it is legit. It's kind of like stepping into the frantic Terminator, where it's like you're out there fighting against Skynet, just cool. taking on, like, there's aliens and there's robots. But anyway, played with my nephew yesterday. That was the whole point of like getting it, so I could hook up with him. And so my brother, so their dad is on as well. So like the four of us, it's two nephews, my brother and myself. So the four of us run a squad. It's a lot of fun, and that alone is kind of worth having it. So some family bonding time, it's good stuff.
Yep. And you bought it from GameStop. That's what really matters.
Bought it
That's
from
why the
GameStop.
stock is up. That's,
Exactly.
Chris, that was half their sales for the month. So,
I think so too. I mean, it's happy to contribute, and anyone that's still holding. And look, I watched Dumb Money, right? I watched the Eat the Rich. I mean, anybody that's still holding, crossing their fingers, like if it can help you out with your stock position and your hodling GameStop, then I mean, it's the least I could do to contribute.
yeah. Yeah. You know
But
what?
it's crazy. What
You're
is the news, honestly, Nick? I don't have any ideas. It was not on my radar. I haven't been paying attention to it. AMC, Bed Bath and Beyond, GameStop aren't even on my radar.
Yep. Well, Chris, I mentioned that I think I'm going to take a for fun short that's tiny on this trade just to
Okay.
watch it. I'm not
Okay.
there yet because I mentioned on the open of this, I said, on the open, you're either going to see just massive selling into the retail volume that shows
Yep.
up, or retail is just going to get, showing up to the desk because most retail traders don't even, most of the Redditors, they don't even know how to place a trade in pre-market. So they're all waiting for the market open. I mentioned market open is going to be really interesting here.
Right.
And sure enough, it's actually shown to make a move here. So I wouldn't be surprised if they can squeeze it for a little bit. It's not, total speculation. I have no idea where it goes. It's really, I mentioned this a couple times, not where, I make my money. It's not where I really have my bread and butter, but from just
Right.
a pure sentiment read, Chris, I mean, I think it's interesting. We haven't seen a move like that in GameStop in a while. And, perhaps if it actually persists, it's an indicator of risk on that, maybe sticks around. But if it fades, maybe it's an indicator that risk on is fleeting and that this is like a last kind of uh high of the move. But I don't know. What about the Nasdaq and the S&P? Let's get on our subjects here today.
Yeah.
What are you thinking this week? I think we might see a little bit of a little bit of a pushback, unless you need a catalyst, in my opinion, to really break those highs, whether that be Nvidia earnings, whether it be a great, CPI print. What do we need to break the highs? And do you think it could happen?
Yeah, I think you said it. It's going to have to be the combo of PPI CPI this week is going to have to come in softer than forecast. And that's to me what the market. So the market has been pretty happy with the overall earnings consensus. The Fed has, uh, I suppose, pivoted from market went from 6 to 7 cuts to 1 cut to 0 cuts, now 2 cuts, and the market seems to be happy with that. I don't think that we're going to miss for 5 prints in a row to be over forecasting for inflation numbers. So I think the jobs number or the inflation numbers come in a little bit softer. That's just my opinion this week. We're sitting right up near these highs. But here's the one thing that concerns me, Nick. If I take a look at this chart here, on the Qs, on the SPY, take a look at these subgraphs. Even
Mm,
if we push up to the same highs, we have divergence, like very noticeable divergence on the momentum oscillator as well as the relative strength. So when we hit the recent all-time highs, we were overbought and we're right up against the highs again, pushing against them. If we test them or break them just briefly, I don't know if that's a sustainable rally. And I'm not calling for the bear. Like I'm not going to sell the market as eagerly as I did back in end of March into April. Like I was actively bearish in those positions, looking to see if I could take a chunk of the sell off, which I had a nice profit. Those 2-3 weeks we had sells in April, but I could just see us not having a lot of extra momentum to the upside. I mean, if you look at the Edge Finder, historically, you're bullish in June, you're bullish in July, and you're even bullish in August. It's not really September until you expect to be like the next big sell-off. And I also listened to a podcast this weekend. You've heard the phrase "sell in May, go away," but the reality should be, buy in May and stay instead of go away, because the performance from um, May to October is just as good as November to April. There's really no difference. It's like 1% difference over 100 years.
yeah.
It's so it doesn't
Well,
make
and
any
Chris,
sense to like sell in May.
it,
Yeah.
intuitively, it kind of makes sense if you think about it, because I think you've probably heard this many times as I have, but like a lot of times the market kind of floats up when it's on low volume. If the
Yes.
summer months have lower volume, and I pulled up that chart that you were mentioning on with the
Yeah.
seasonality,
Yeah.
perhaps that's what we're seeing. You've got here's May, here's June, July. We're expected to see, at least seasonality wise, in the last 10-year historical performance
Yep.
check, some positive months here. And as you mentioned, that also competes arguably with what you see in November and December seasonally. So for me, it's not something I want to fight. I'm not shorting the stock market. I was hoping for a bit more of a pullback, but I got some entries. So, it's kind of just like take what you can get here.
Mm-hmm. Yeah, so all these show the same thing, right? If I go to the daily chart or the weekly chart and I bring up those subgraphs, let's go. So the daily chart possibly has a little bit more momentum. The weekly chart, I think, is what's concerning, and that does take kind of precedence. I mean, we had overbought conditions with some divergence as we hit the all-time highs. We're coming back up to the same levels once again. That to me is a sign to say if you're getting the breakouts or you're getting the drifts to these all-time highs once again, it's not actively look to short, more so than get stop losses in, get protective orders in, trail this thing because we could have it go higher. I mean, I right there's no Fed drama right now, right? I mean, June, July, it's pretty much baked in. Nothing's going to happen. The market's fine with a pause. It's going to be that August, September is going to be Fed drama. Right now, it's focus on earnings, focus on news. This week, front and center is going to be PPI, CPI Tuesday, Wednesday. That's really what's going to be the mover. This week, earnings is light. It's 350 some companies, so it's a little bit lighter. But one thing that might be enough to at least make some headlines would be, so I'll show you the same thing on the SPY. So you can see on the weekly time frame, we're up to all-time highs. We're getting back up there again. Divergence. I'm just a little cautious. That's all I'm saying. I mean, I'd like to say I'm protecting some profits. The DIA, same type of thing. We get to the highs, divergence. You can see it's hidden bearish divergence. That's what I see in the technicals. But a couple of things that might kind of come out of a left field might be some China play. This is Alibaba, which for me, I've been bullish on Alibaba and Baidu and FXI and KWeb. Those are some ways that I've been having some China exposure through options. And we have a nice little run, maybe up to the 144, the 200 EMA. Let me go to this chart. It's really clean on these charts here. I just see a beautiful technical pattern. I mean, we're out of the gates this morning up quite a bit. I've been waiting for this. And this yellow box is my measure move for symmetry. So this is a low to high. And once we started to put in this low, I've just measured it out. So in case we are getting this move, there's one probably 29 to 130. And I was way early to this. I mean, I started buying in thinking this is going to be the right shoulder. You've got left structure here. So I was buying in, and obviously that didn't go super according to plan, but limited risk and defined risk with earnings or with options. But now way more bullish and getting the participants that I want and direction that I want. So we do have earnings on Baba. We have earnings on Baidu, and both of those are performing pretty well. Technically, they look really clean. This is a nice little wedge break. Can we get back up to 126? Can we get all the way back up here towards 157? If we have a measure move, this is a head and shoulders. I mean, Nick, put this on the radar for the next like 3 to 5 years. If this stock goes to a symmetry move, we're going to be somewhere around 170. If we actually go to a true head and shoulders pattern, we're talking about a move that's going to be like 240, 250 bucks in the stock. And we're starting from 90. I mean, that's nearly a 300% gain on a stock that's been this, I keep calling China the sleeping dragon because they've been so quiet about this reopening. And I think now they're becoming a little bit more vocal on supporting their economy. Numbers are looking better, whether you trust them or not, right? I mean, and that's one thing I will say, like, I'm not all in on China. I'm probably, 3 to 5% portfolio on all China positions. It's mostly through options because it's defined risk and it's not super costly.
Well, there's some names
right,
in there, Chris. I mean, you mentioned Baba and Baidu, and these are companies that have incredible profit margins. They make so much money. Their price to earnings are much lower than American companies on average, just because there's a risk premium. You're trading across a market that arguably is our opponents, our foes, whatever you want to call them. There's a risk premium to that compared to the, what you're going to get, the transparency of American companies, yada, yada, yada. If the company is going to do incredible over the next 10 years, the stock price could catch up to its true value, especially, Chris, if you do see over, the coming years, if there is some sort of, everybody kind of expects tension from US and China. If there's any like, hey, we both need each other to survive, which there was some optimism around that. When I first got bullish on China, it was when, part of it was when Janet Yellen and the Chinese government officials that they were speaking with, they kind of both were on the same page. And it seemed like there was a fresh understanding that the US and China, they need each other. Our economies are really linked more than anybody cares to admit. And, I think that if you subscribe to the idea that the future could be brighter than darker in terms of global politics, then China's the trade. I think there's maybe not the whole thing. I traded FXI, Chris. I got the downsides of covered calls. I got called away from my shares. I made good money on this. Can't complain. But of course, it's kept going without me. So if we do see a dip, I may get back in. I might play it again. But I made some money on FXI specifically, and I would not mind being a longer term shareholder of something like BABA because yes, you're taking on that risk, but it's a company that if there is any tension relief, the true value of the company could be much, much higher if it were to be a little bit more, smiled upon in terms of geopolitics.
Yeah, and I mean, I think you're right on with optics, right? I mean, this is the last couple of years. My argument, it's like I think that China and the U.S. 100% need each other to
Hmm.
maintain and sustain this world number one, world number two. Granted, they're probably going to fight it out to make sure, like we stay number one, or they're trying to get to number one. Um, I think that what would kind of blur the lines a little bit would be if China does make a move on Taiwan. That would make things a little murkier moving forward as far as relations.
Hmm.
But I do think that the competitive nature of okay, China EV plays. They're trying to make cars way cheaper than what we do as far as electric vehicles. Baba and Baidu is essentially your Google and what your Google and Amazon of China, right?
Yep.
So I just think with the country supporting real estate, the country supporting tech, um, tensions right now are manageable. I think everything's okay. And also this is a big contributor to global GDP, not just our like we've been focused on the US and our resiliency, but China's really been very quiet since COVID. And coming out now, 3, 4 years later, and saying we're finally going to support, and it's they call it lifting animal spirits, but that's really what's been needed, and that was the big missing piece from 2022. I mean, the US market had a great reset with everything going down. Everyone wondered coming out of 2022 what's going to help lift up the markets. Well, maybe it'd be China. Well, it didn't happen. It was AI and it was US
Mhm.
tech that lifted us out of that crap in 2022. But here we are now. US is resilient. US is doing pretty well. The market seems to be digesting the Fed stuff and all these central banks, whether it's divergence or convergence.
Mhm.
But China's out there doing their thing, and I'm liking the technicals. It's been time, and look, it's not like nobody's watching this stuff. I mean, Ray Dalio has been one of the more vocal, you know, hedge fund masterminds of like everyone says China's uninvestable. Well, Bridgewater's long in China, and I think there's a lot of reasons why. So
Sure.
anyway, but I
Yeah,
like
no,
I like the place.
I think it's fair. I also, I wonder in terms of the dollar trade you mentioned on it. I was speaking a little bit earlier with Ivan about
Yeah.
this week and the CPI and the PPI kind of concept. What are you positioned for this week in terms of the dollar trade? Are you long going into this week? Are you short? Are you positioned at all?
I do. The only exposure I have in the dollar right now is I'm dollar CAD long and I'm dollar Swiss long. So if I
Okay.
go dollar CAD long, I would like to see as long as we stay above this high. Let me use a straight line here. As long as we stay above that high, just trace. So as long as price stays above that, I'm in good shape. I'm looking to see if this will be one more corrective move and just a little bit of pausing until maybe we catch a bid on the dollar CAD to go up to 139. I think Nick, this is going to be a trade for me that if I'm holding long and I get this price to cooperate, I will likely just start moving stop losses from
Mm.
down here into profit because I don't think that we stop at 139 or 140. I think that the sneaky little play that maybe not a lot of traders are noticing is look, we had a breakout in gold that was in a 2-year range. We had a breakout in silver that was in a multi-year range. We had a breakout in Bitcoin that was a multi-year range. Um, I'm not saying dollar CAD is anything comparable to that, but dollar CAD had a range from October 2022 to now. And if we
Sure.
break above this and we break above this to the upside, I do think that right now, why would the dollar CAD go higher? It would be because you've got a Bank of Canada that's probably going to cut rates earlier than the Fed. You've got an economy that's probably not as resilient and doing as well as the US. And I think exchange rate wise, the dollar CAD could be a sneaky play where, if we hit 39 140, I'm pretty sure there's a lot of stop losses sitting up here. And if we bust through those levels, this thing can break aggressively to
Sure.
4250 to 4500. So to me, I think that this leg, if I'm right on this and we head up, I think I'm just going to put my stop loss at plus 30 or plus 50, let it run, and then just look for this. If we go higher highs, higher highs, higher highs, just move my stop, and just try to trap as much of this meat as I can if we get a big breakout. Because the measure move, you can already see it. This is the halfway point of my measure move. That's my full measure move getting all the way up towards 4,500. So that could be a sneaky little play. The other dollar crosses, I mentioned dollar Swiss. I'm going to stay long in this one just for positive swap. I would actually welcome this week. I'd actually welcome dollar weakness for this reason. We get a pullback on dollar Swiss. I'm gonna enter back in on dollar Swiss long for a better structure position. But if we get dollar weakness, let's go back to the DXY. Dollar weakness to me, we could get it and it could be very testy. But as we said a couple weeks ago on the show here, as long as we're not invalidating 103.85 or lower, I think the dollar still has a chance to catch bid. But I do think that the dollar is going to be the sacrifice for a stronger stock market. I don't think that you can have stronger dollar and stronger stock market, especially to a high correlation. So I do think that if the market wants to take the stock market and run with it in a big way, the dollar is going to have to take it. It's going to take it. It's going to get punched in the nose and the dollar is going to get weaker. And this is where I would say I'm no longer interested in dollar longs if we're back below 103.80. But I do acknowledge that this pocket was filled, that technical candle right there. If we come back into that same level and a rip to the upside, this still is showing structure support. And I could see the dollar making a run, but dollar gets stronger. I don't know why the stock market would go with it. I think the dollar gets stronger, stock market gets weaker because something's going to show, I don't know, higher inflation, higher whatever. But I just think that the market right now, I don't think that we're going to miss 5 times in a row. I feel like that's terrible forecasting for the U.S. That's it. Look, we're not Canada. I don't know if anybody's ever watched. If you ever watched Canada numbers on Fridays when they have their job numbers that kind of align with non-farm payroll, they forecast like 10,000 jobs and they come in with negative 50 or a positive 200. Like their forecasting is way off. So it's like at least us, we forecast 200K, we get 175 to 250. It's within a reasonable window. But anyway, I'll say this to wrap up the dollar stuff. If I like a trade in the dollar strength, dollar CAD, euro dollar, pound dollar. Those are the three that I like the most as far as playing dollar strength. I think Aussie and New Zealand, commodity based, resilience. I don't think the RBA and the RBNZ is nearly as dovish as the Fed. Just in dovish in general, I don't see that monetary policy divergence be as strong in Australia and New Zealand. Also, they're close trading partners with China, so I could see that their currency and their economy continues to perform pretty well. And if inflation stays where it is or lower, then I don't see them having to cut and be as dovish as other banks like the ECB and the BOC.
Sure. Another side to it, Chris, is, I've talked about this a lot this year as, TLT as a potential, if you don't want to worry so much about the other countries, because what you've just mentioned, like if you're trading DXY, what you inevitably are trading is the US relative to peers. If you want to trade just the, kind of the Fed rate cuts, if you think rate cuts are actually in the picture, which I do, I think that, rate cuts are probably on the agenda this year. Where I think I get more questionable is whether or not those rate cuts are coming, if it's going to really equate to a soft landing or not. That's where I'm not sure. But what's cool is you have TLT, which kind of perfectly fits that scenario, in which case maybe there's rate cuts that do occur and you have yields start to come down, but perhaps it's not a perfect crystal clear soft landing. At some point, maybe these bonds look really attractive. I'll give you an update on my TLT position, Chris, just because this is one that I'm in. So I've sold calls. I have a position. I have 1,000 shares at a average price of, I think it's, hold on, let me see, average share price of 191.93. So I'm in my TLT position still. I've sold calls at 92 just to collect a little premium. When I sold them, the price was here, so I didn't collect very much. If this rips, then fine. I will just take a small profit on it and also collect premium, both on the puts that I sold and the calls that I've sold against my position. But I think that TLT might actually be kind of a sleeper trade in the bigger picture, because everybody is so long equities. Everybody is so bullish on stocks. I think TLT might give you a nice little bit of a hedge if you do in fact start to see sort of the stagflation event where you see or even just a scenario in which the economy starts to slow, period. If this is not going to be a perfect soft landing, TLT might actually be a decent spot to be in. Is that a fair idea, Chris?
It's very fair, and also the one thing that we probably can't continue to do is just have debt-fueled rallies.
Mm-hmm.
I mean, at some point,
Yep.
34 to 35 trillion dollars in debt has to matter. And
Sure.
I know that we can print more, and we can take on the debt, and we can try to use that debt and leverage it, and we can outgrow our debt, maybe. But I just think at some point there's going to have to be a little bit of austerity in the US. And I think that, cutting rates and bringing rates down, but still being restrictive on inflation. Um, I mean, I don't know if this is the bottom in TLT, but it is the trade that I'm in as well. And so I took a different approach instead of just going straight into. You did it with a cash secured put on TLT, but you were assigned. I did
Yep.
it through a like mega leap. I went out to 2026 and bought a January 82 call. And
Okay.
right
Yep.
now, so I paid for it. I mean, I paid $14.21 for that per contract. But right now it's trading and maintaining, even with the recent pullback that we've had. I'm only down about 30 or 40 cents per contract.
Sure.
So I've got time in the trade, and if anything does look a little suspicious with the markets are selling off or something worse comes in, I think I've got myself some time. And my plan was, I don't know if I could time this and say that by 2025 TLT is going to be up to fresh highs, but going all the way through 2025, I think I'm giving myself enough time that we could probably be back up here at $100 on the 20-year bonds. We will start to see that whatever rate cut cycle we have into 2025. I mean, that's one thing. I know you watch this and it's on the A1 Edge Finder as well. Going into, I'm surprised they don't have December of 2025, but right now, even going out to September of next year, we're looking at about 125 to 150 basis points of cuts.
Yep.
So that right there is going to make the short end of the curve is going to look very unattractive when all of a sudden right now you can go out, park your money for 12 months or do 3-month treasuries and roll them and get 4.85, 5.25, whatever it is. But
Sure.
that's going to look very different over the next 6 months. If we cut in September, if we cut in December, all of a sudden that expected yield curve is going to be way worse on the short end, much more attractive on the long end.
Yep.
And I just think TLT is a great trade. I think it's a great trade.
Yeah. So I mean, I like it. I think dips are opportunities in my personal opinion. If not, and this is something, Chris, where it's nobody knows the future perfectly, and so I don't mind owning a little bit of TLT in my portfolio simply because maybe this isn't a perfect soft landing, and then TLT looks a look better. Now, if there is a perfect soft landing, then TLT will still do okay, but it won't do nearly as well as stock market. So you're kind of trading
Agreed.
off, that
Agreed.
potential upside for a little bit of security if the market does not see a perfect landing. And again, it's just something that the historical track record of the Fed to complete a soft landing has not been great. There's been times where it's been pulled off, like 1995, which to the hope of the bulls, when you say this moves are kind of overdone, well, 1995 was an incredible period. I mean, I pulled this up a couple of days back, just looking at oh, it doesn't go that far on. Let's go SPY. So 1995 was the last instance in which case people kind of quote as this was a great soft landing. And look what happened in 1995. This is where the Fed had to, kind of get everything under control, and they actually were able to pull it off while keeping growth in line and inflation, came down. It led to a massive period, which, here's the thing, Chris, this did inevitably lead to a horrible, horrible bubble, but look
Right.
how long the pump lasted on
Yeah.
a soft landing. So I have to admit too, that if I'm wrong in thinking that maybe they don't pull off a soft landing, um, then you kind of have a lot of room for what could be the next, kind of big cycle that we saw in the late 90s, which again ended up being a terrible post period after that. But
Hmm.
in the meantime, there were 5 straight years of just massive gains. So
Yeah.
I don't know. That's where you kind of just have to stay, I'm never tied too hard to a position. I guess the old expression, hold strong opinions lightly, definitely applies here, because if I'm wrong and you do start to see, if we get cooling inflation this week, Chris, I mean, we've had a pretty good earnings. I have to kind of admit that these are mostly pointing towards more upside in the meantime, and just keep a stop loss there.
Agree. And we talked about this last week. This is kind of that Goldilocks window where the market is seeing the slack in the labor market. It's softening. The Fed has been talking about that. The market's kind of running with that. We have better inflation numbers. We have the softer labor market. The Fed doesn't have to be as aggressive as far as just trying to just beat the idea into everyone's brain. Higher for longer, higher for longer. We'll cut. We'll hike if we have to. It's like they might just remove that from the narrative and make the market think like, oh man, they're not going to hike. And most people don't think that they're going to. But as you were talking about that, these are the things that I thought, for me, this is worth having exposure in these different instruments for just a little protection, because we never know. But I would say just to that chart of the mid to late 90s, time in the market is more important than timing the market. We don't know if we're going to see. I mean, is the SPX going to go to 6,000? If so, I mean, I'm talking about little divergence at the highs right now at 53, 5,400. If this market by the end of the year doesn't care about anything other than destination 6,000, it's going to find a way to get there.
Yes.
If the Dow's destination 40,000 and beyond, it's going to get there. If the Nasdaq's going to make it's like, we can't control that stuff. And if it's better to buy than time in the market, just don't try to call the tops and bottoms, but be a participant. Saying that, I mean, portfolio structure wise, I do think this is important to have some area of diversification. I mean, if the stock market isn't just the best performing thing ever, TLT is going to be okay. Gold and silver and Bitcoin are good alternative plays against the dollar and against some inflation and against a troubling market. I mean, and Bitcoin, take it or leave it. It's like, I think the speculation is still out there for plenty of interest in Bitcoin. It'll be interesting if we approved all the ETFs for Bitcoin. Do we approve ETFs for Ethereum? Yes, no, maybe. One thing that is really dumb. Let me finish this too. We talked about the Chinese stuff. So Baba, Baidu, FXI, KWeb. Those are the four that I like quite a bit. JD is another one. That's a retail, like an online retailer. I'm in that stock. That's doing pretty well. And then utilities and energy. Those are not your performing sectors when the stock market is just crushing it to the upside. That's tech, that's communication, that's your consumer discretionary. But like your communication sector, your tech sector continue to outperform the broader market. But those are good ways to be.
I mean, my goodness, these things,
it's straight up. It's straight up. I was going to say so XLU. If you're seeing sectors leading, if you're seeing utilities and energy sectors leading, man, it's hard to believe that we have a huge, broad bull market. Usually that's never the case. Those are usually the ones that are underperforming. In the AI space, we think it's going to be effective. We hope it's going to be effective. It's like, but I think that kind of rests on NVIDIA. If NVIDIA goes to $2,000, $3,000, $4,000 a share, then AI is the real deal, and it's going to be it'll be like what we have right now with the Mag 5-ish, whatever. It'll be NVIDIA and maybe a handful of other semiconductors, but not everybody.
Well, and you point out NVIDIA. I mean, the thing is, NVIDIA is like the only one right now, and this is one of the big things you can poke holes into it. The only thing that can tangibly monetize AI right now is the picks and shovels sellers. NVIDIA, right? They sell the equipment, they sell, but you got to think the big, if you want to be a pessimist or concerned about this, is like, okay, they're selling all that equipment there, but where is the return on investment for all of those buyers? Because, in the internet days, the early internet days, companies did eventually come out and massively monetize the internet and do it super well, but it took time. And in the initial phases, people do what they do. They get overhyped in the short term. And again, I also want to reiterate, I actually think that the curve for monetizing AI won't be nearly as long as the internet, because I do think that there are some tangible ways that people are already starting to see. You can, and here's the easiest one, Chris. It's not one anybody likes to hear, but cutting jobs and replacing it with AI is one of the fastest ways to monetize. There's a company that I like, Palantir, and I know everybody, this is like the most retail loved stock in the world, but I don't own any, but I'd like to buy some. I listened to their earnings call, and they did some partnering up with General Mills, and they saved General Mills, I believe it was $14 million by using their product. And I don't know if that ended up in job cuts or what, but the long story short is by harvesting their data and using their technology, General Mills was able to save a lot of money. And that is the way that at least in the short term, that I can see. I'm not a fortune teller, but it seems like the way to monetize AI is efficiency, right? Like find ways to cut jobs or to better allocate your resources, or source your data better. I just thought that was, kind of worth mentioning. I think that the curve for AI becoming a profitable entity is not as far or as near as people think. I think it's probably somewhere in the middle.
Yeah, and also that's going to be a potential jobs problem, where all of a sudden it's like, look at all these profitable companies, but look at all the jobs that are being cut. And one thing that I don't think a lot of people pay attention to is, yes, we had this big reset in 2022. If you look at the NDX, or look at the Qs, that reset we had in 2022 right here, late 21, 2022, the reason that tech has come back in the way that it has is because tech cut jobs like crazy in 2021 and 2022. I mean, Meta is one of the biggest turnaround stories of the year. Is one of the top performing stocks before they just had that Zuckerberg spending so much money in AI right now. But they single-handedly had like one of the biggest turnaround stories after being down 60, 70%, and they come back and they rip to all-time highs all over again. That's because they shed tons of jobs, and so did other tech. And I just think that the nice thing about the ETFs that we have here in the U.S. is the cream rises to the top, right? You have the best companies that will increase in market cap and increase in size, and you get these forced buyers coming in from pensions and 401ks, and Meta's going to get a lot of love all the time. The one thing I wanted to ask you about, have you read anything about this like leveraged single stock ETF nonsense that's going on out there?
Like Nvidia or like Tesla yields and like all these different things you can do.
I just want to put a public service announcement out there. Please be careful in that stuff, because do you understand that Nvidia has performed, it's like 20,000% since inception, and somehow people are saying now like that's not good enough. I wish I could have had 40,000, and it's not going to end well unless you trade options. Even that with leveraged instruments, I'm very leery of leveraged instruments and options, because there's backwardation, there's contango, there's ways that the option prices are not priced out to truly reflect the underlying asset. So just be careful. I mean, the nice thing is it maybe allows a trader to justify, okay, instead of taking Nvidia at $894, I don't even know what the leverage ETF is for Nvidia, but whatever it is, or whatever other stocks they want to throw out there. And I would imagine that this is just Wall Street trying to serve the demand. People are missing out, right? This is serving FOMO. Hey, you like the fact that semiconductors are up. Well, here's one stock that you're in the semiconductor space and you can get it because it's way cheaper, but it's double leverage for Nvidia. And the ETF inflows already have been insane.
Straight up,
they've been insane. They've been insane the last couple months. Yeah, a couple months.
I got one to show you too. This one I heard I was listening to CNBC, and this one kind of came on, and it was like a pump story about MagX, which is a daily 2x long the Magnificent Seven. So all the ones.
Oh my gosh.
So you could basically buy the 7 on 2x leverage. And the idea here is that they offer, I think, like a leverage short, a leverage long. But again, the volume is massively skewed to the long, I believe. Yeah, I heard them talk about, they asked the guy, are you seeing clients go more into the long or the short? And he said, oh, massively more to the long. And so, I just remember that being a little bit of a red flag when you see all these fancy, financial instruments that allow you to take what newbies might not recognize as significantly more risk. You got to be so careful, because these things in a down market would be down 80%, 60%, whatever it is.
I would. So here's the only justified reason I could say, okay, I mean, this isn't terrible, right? But where was this 2 years ago? Not now, right? Not when Apple's been on decline and Tesla's been kicked out of the Mag 7.
And they all come out of the woodworks after the big
Exactly.
2022. Yeah.
So point is, I mean, I could say this. Could I justify, let's say I have $100,000 account. Okay. Could I justify, instead of what I would say, well, I'll put 10% in the Mag 7. Well, now I should put 5,000. Now I should under capitalize this portfolio or this allocation, because it has double the risk, And so think of it this way. Let's say I take 100K, and instead of doing 10K, I do 5K. I have to realize that 5K can go to near zero, because these drawdowns in a double or triple leveraged instrument are going to be way worse. I mean, Mag 7 could have a 20% drawdown. If you have a 2x or 3x leveraged instrument, you're down 50 or 60%. Coming back from that is a lot more challenging, right? Anytime you've seen the numbers, if you have a 50% drawdown, you have to make 100% gains in order to get back to where you started. So just keep that in mind. Like, I think it's funny that these instruments are coming out, and it is purely driven by FOMO demand. And I just that's what I'm saying. For the channel you guys have and the followers you guys have, you have enough traders out there. If you can just spread the word a little bit, just use a little common sense. It's just a public service warning, because I don't think it ends well, because I think you're going to get a bunch of unsophisticated traders that don't know the risks of a 2 and 3x leverage instrument. And you're going to see that, just as nice as it would be on the upside, if you don't get the upside, you're getting 2 to 3x times that downside, and you're going to be underwater and maybe never recover. Never recover. So just be careful. That's all.
Well, very good stuff, Chris. I'm going to let you take over for a little bit longer here. I know you got to run in 20, but I'm going to give you the stream just so you can go through some more things that you'd like to focus in on. Real quick before I step out, to everybody who's listening here with us live, Chris has his own YouTube channel. I want to just ask you guys, make sure to go subscribe to Chris Pulver on YouTube. If you're watching on Twitter, I know we have a good number of people watching us over on x.com these days. It's Real Chris Pulver on Twitter. You can find him there. Keep up with his stuff. You can find his Discord channel, all that good stuff. Chris, thanks very much for coming on the show. You've got it from here for a little bit, and we'll see you back next time.
All right. Thank you, Nick.
All right, man. See ya.
Thanks. All right, everybody. Before I go today, which will be around the top of the hour, I will share my Discord link. Last week, I posted this in my Discord, and I'm continuing to gather some feedback here. So let me go into my free chat. Last week, I posted a poll, and I just wanted to see if I were to offer some type of alert service, trade service, what type of signals would people be interested in? It's a mix, but I mean, everyone's kind of showing some general interest in everything. I've got a lot of Forex here, a lot of options, a lot of stocks, indexes, ETFs, over a couple of polls, kind of the same thing. So I'm doing that because, my Discord channel from start is really just allowing me to bring in all my content to one place. I've got the free group chat for the community. Anytime I go live on YouTube, my blog I post every Friday. Anything I post on Twitter, any charts or analysis that I post, any education, strategy guides, PDFs, classes, videos, robots, anything that I have in my education offerings are right in here in this link. I do a lot of private instruction as well. It's a lot of evenings, a lot of weekends. Affiliate links. Nick and the team at A1 Trading are awesome. I have a promo code. Just my promo is Pulver for the A1 Edge Finder. And then some other softwares and services I use in the industry that help me be a better trader. Every Monday, like today, I'll finish up these sessions. I do a top weekly pick, and then I have some real-time news. But this will continue to expand. I do have some channels set up for signal services, and I want to see where I can help meet that demand and help traders. So anyway, I'll post my Discord channel before I go today. And if I throw another poll up this week, I'd appreciate your participation in that to see where those alerts and services could be served best, and how they can reach the most people. So anyway, SPY is quiet today. I was actually looking for a quick credit spread on the SPX. I don't think we're going up too much higher than 52.50 today. but I can only get about $20 to $30 credit on that right now. It's going to be a news week, right? It's going to be PPI, it's going to be CPI. I am curious in the broader market if we have some earnings on outside of US, right? So here are some of the notables for this week. Let's see here. I had mentioned Fortnite, 10 cent. 10 cent was part of that. That's going to be today. I know that everyone's excited, like GameStop is up, and currency strength wise, we have some things moving and shaking a little bit. The currency strength chart today, we got the pound and euro on top. We got the Aussie in third. Let me make sure this is today. Yep. So we got pound euro on top. We got the Aussie just faded off the highs recently. The Swiss has been dropping. The yen's been down. This is all good for me because I'm long against the Swiss and I'm long against the yen. So my pound yen position is still running. All my other yen crosses are closed out. My Swiss pair, I love seeing the Swiss get weaker because my whole basket does well when that's the case. That's been one of my bigger kind of swap and carry trades this year. Going into the earnings notables this week, I had mentioned this, Alibaba, that's one I'll be paying attention to. I know Frank said, Frank's in Europe and roaming around, but this would be a good week for him to be placing a couple of trades alongside me. So I know he talked about Home Depot to me offline last week. I said Baba's one that I want. Baidu's another one. JD, you want to look at the health and consumer, take a look at Walmart. You want to look at some AI space from an oldie but a goodie. Your Intels and your Ciscos of the world. These are the names that have been left for dead in the tech space, and all of a sudden they're starting to sprinkle in some AI, and they have the infrastructure to maybe pivot into AI and maybe help them get better margins and profits moving forward. So some of these, like the IBMs and the Dells and the Ciscos and Intels, they could come back from the dead if they really focus on this big shift into AI, maybe. So that could be interesting this week. And I do have some exposure in Under Armour. And so Baba, Baidu, Under Armour. I do have some naked puts on Cisco that I should be well out of the money right now, but I'll be watching price on that. Walmart, one of the biggest retailers in the world, pretty much going neck and neck right now. Like Amazon has closed the gap on overall revenue. I want to say it's got to be close. Amazon to Walmart revenue wise, it's got to be pretty close, but it has closed the gap a lot in the last 10 years. And that's probably it, but that's enough. I mean, for only 352 companies this week, there's still probably 5 or 6 that I'd be interested in maybe looking at some earnings trades on. Last week we traded earnings and we were 4 for 4. That was, let me see what that was last week. Let me go to my equities on demand here. Last week we had a win on Disney, win on Shopify, win on Palantir, and what was the other one? Was that it? Oh, TTD, Trade Desk. So 1, 2, 3, 4. 4 for 4 last week. That one's profitable. Let me look up. I didn't fill that in. 784. I closed it out for a small win. TTD. There. Closed it out for about 817. So 33 cents. Okay. 817. I just need to update this. So 8.17. That was a win. Taking the 33 cent profit per contract. And I have SPY Qs, IWM. I did close up as I started the session today with Nick. I did close out the DIA. I did close out IWM, and I did close out the SPY all for profit. I'm still sitting in the Qs. Right now, it's going to be a net. So my net debit was like $22.19. I believe that if I close everything out today, I'm probably walking away with a net $23.50 or so. Which right now, going into this week with a bit of indecision, I'm okay with that. And I think what I'll end up doing is looking out maybe next week or the week after, going into the end of May, and see if I can price in a very similar strategy, which looks something like this. If you're familiar with options and the risk analysis graph, it'd be something like this, where if price crosses a certain threshold, I'm profitable. So I need price to move. But I don't want to put everything on just this week of trading. I know it's a little lighter on the earnings calendar. I know we have some big U.S. data, but the volatility has gone down quite a bit. If you look at the IV rank in my platforms here, I mean, if I go to the SPY is trading at 15.8. The SPX is trading at 15.8. The QQQ is trading at 21. That's a little bit better. The IWM is trading at 44, obviously a little bit better. So that's not a bad thing. I think there's some volatility is coming off these lows. We take a look at the VIX. Something could spike up on the VIX to get the market a little excited. Yeah, we just had a big jump in the VIX today, actually. So I think those IV ranks have gone up. I'm going to keep an eye on this. I'm not really worried about, selling volatility or selling that vol until we're up into the, the 20s. But we have just, done an incredible job of coming all the way back down to the lows. And I'm looking to see if there's something that gets the market a little bit more excited. So anyway, that's where I'm at for today. I'll go a couple more minutes. Yep. Dollar CAD, pound dollar. Sure, we'll take a look at those. I talked about those in my 9 o'clock session. So if you do follow me out there on YouTube, I do start a 9 o'clock session Mondays and Fridays. I call it the Pulver Report, and I'm in that. We talk forex, we talk futures, options, stock market, ETFs, broad market stuff, macro stuff. I start that session to kind of get my feet wet, and then I can come in ready to rock and roll with Nick and the team through the week. So dollar CAD, as I'd mentioned. I like dollar CAD right now. Look, it's a range trade. I think that's the easiest thing we can see. I'm currently long in the dollar CAD, and my stop loss is below this 3,500 low. So if we have some consolidation here, I'm looking to see if we get another move to the upside towards 39. Now there's resistance there, there's resistance there, and there's resistance there. So I get it that if I get this trade right and it's going up towards 3850 or 3900, I shouldn't just keep my stop loss down here. I'm going to actively move my stop loss up. I'm going to eliminate my risk on the trade. But what I'm looking at, and I told this to Nick, if we end up breaking through, let's say 4,000, if we break through 4,000, there might be a trade where we go to 42.50 or we go to 45 on the dollar CAD, and it's not necessarily dollar strength, but more CAD weakness. And this might be something I look at for the summer, because if the BOC cuts, and this might be lining up for forex trading, summer trading in forex could be more exciting than usual, because if the ECB starts to cut, if the BOC starts to cut, if any other central bank starts to cut, that is the monetary policy divergence that we've been talking about, right? Everyone's been following the Fed. The Fed's restrictive and the Fed's raising rates, and so everyone raised rates. And the Fed is now starting about talking about cutting rates, so everyone's starting about talking about cutting rates. But who cuts first? The Swiss National Bank cuts rates, right? If the ECB is next to cut, if the Bank of England's next to cut, if the BOC is next to cut, that will put the dollar in a position of strength, possibly over the summer, which is where I think dollar strong could also yield a slightly not struggling, but just like a slower moving stock market, slower. So anyway, I think dollar CAD, if we get above 39.50 to 1.40, don't ignore the fact that just because this is resistance doesn't mean it has to hold. If we break that level, I could see the dollar be put in that position where it's stronger relative to its counterparts. Doesn't mean that the dollar is the greatest thing ever. It just means that relative to the weaker and more dovish central banks, it could be a better position to be in. So dollar CAD could be a positive carry trade slightly, but enough so that in the Forex land, you're getting paid positive swap to hold dollar versus CAD. And if oil is not really, really bullish and it doesn't affect the CAD play that much, BOC is dovish, Fed's a little bit more resilient until we have that September cut, if we have a September cut. And I can see the dollar being a stronger trade. So dollar CAD to me is more bullish right now. Pound dollar, euro dollar are both same thing. I'm looking for the dollar to hold some strength. And so pound dollar, it's pretty simple. If I look at a trend line break right there, I would take a pound dollar short. I do have a pending order in my flex trading room right now for Forex. We're going to sell it up there at that yellow box low. That's right around 2,600. So if we sell it there, my stop loss is just above this level. I want to see if we hit, we retreat, and then we start to confirm more downside and dollar strength. Euro dollar, same thing. Euro dollar, I don't have a pending order on this one because we're still trying to head up. But if you can see that this channel is holding, right? If we hit around 1.0850 or 1.09, as long as we don't breach 109, I would still say this could be a fake out. And then we turn south, look for a trend line break. If you don't want to get in early on these trades, just wait for confirmation. It's not that hard, right? You get in, let's say I'll circle this in yellow. If you get in here, right, with a stop loss above a visible U-turn, target the low, and take some profit down here. There's good risk reward there. That's probably a 1.5 or 2 to 1. And that'd be a good way to not have to force position, not have to guess where the dollar's going, but just take a clean trade. Okay. Level's saying, what exactly does Chris trade? I trade everything, man. I trade Forex, I trade stocks, I trade options, I trade ETFs, I trade gold, I trade silver, I trade Bitcoin, I trade futures, enough to keep me busy. So enough to be diversified, where if I can't find something, I'm going to find something else to trade. So anyway, I've been trading for a long time. So yeah, what do you want to trade? What do you trade? That's why I was posting that poll. It's like, what do traders want? If I did a, alert service or signal service, what would you like to see? You want just Forex trades? You want a little bit of everything? I can obviously isolate them and give access to, multi-signal service or whatever. But this is what I'm looking at every single day. So between ETFs, stocks, trading options around those for cost effectiveness, Forex is a leverage market, futures is a leverage market. There is plenty of excitement. I would not run a crypto service because I'm more of a investor. I buy and hold and I trade it. Bitcoin, my cost basis is probably 30,000 right now. And if it gets up to 100K or better, I'm probably taking a majority of that profit. I'll leave some skin in the game, but I'm taking a majority of that profit off the table, and I'll invest it. I'll put it in all those other assets that I've been trading actively for a long time, and let it continue to work in the background. Okay. Let's see here. Pound dollar, good on that incognito. So looking for a rejection at 2,600, looking for confirmation to trade. Like I said, if I see dollar strength, euro, pound, CAD, I'd like to trade the dollar against those if I'm seeing dollar strength. Okay. Jason says, can you show your technical analysis on gold? Yep. Gold, I go to XAU and I go to GLD. So gold right now has been amazing. It's been one of the bigger and better trades this year. I still see upside in gold. This is my measured move on gold. That doesn't mean that it has to stop here. Okay, gold going from a multi-year breakout. This length in time, we could see gold on quite the run to the upside. I just think that it's going to be volatile, but to me, as long as we didn't hit my measure move of 2470, I'm looking for opportunities to be buying dips. So I did start a little bit of tranche exposure on GLD when we had this little indecision. So I started a dollar cost average into GLD. I'm obviously excited if we hit some fresh highs. I'm going to hold that longer. I don't know how ridiculously bullish gold gets. I think that this is a pretty impressive run to the upside. But even if we look at wave structure, okay, let's say all this is 1, 2, 3, 4, and 5. Then we should have an ABC correction, right? So gold is not necessarily done correcting, but I do think that when this is over, if we have an ABC correction, gold's going to continue and resume the upside. The flip side of that would be this could be 1, 2, 3. And this is the pause for wave 4, and wave 5 still hasn't happened yet. Either way, I'm still looking for gold to head higher. If you look out further in gold, I think if you go out into the end of 2025 or into 2026, I think gold could be a very good performer in your portfolio for some type of diversification. I think this is a play that maintains a bit more store of value. Obviously, the speculations broke this multi-year range. If the dollar gets weaker and central bank starts to go back and retreat to lower interest rates, that's good for a lot of things. I mean, if you're in the U.S. housing market and you think that in the next 12 to 16, 12 to 24 months, that interest rates are going to be 100 to 150 basis points lower, that's good for a lot of things in real estate. That's good for a lot of things for corporate borrowing. That's good for a lot of things as far as student loans and everything else that's out there for debt, right? I mean, debt can be crushing to a lot of people, a lot of industries, and I mean, I think that it's anticipated that the Fed will start cutting. And they need to do this at a time where they can't let inflation like rear back up. And I don't think it's going to be a Volcker thing. I think they're very lucky that they can jawbone and talk it down. But man, it can get very ugly very quickly if inflation does not subside. So we'll have to figure it out. But this is not going to be something that happens immediately. I mean, look, we're 4 years post-COVID, right? Post-COVID crash, I should say. I mean, whatever. It's been a lot. We've digested a lot in the last 4 years. If you've been trading, I would say this. Look, I've been trading passively since like 2000, actively since like 2008, 2009. I can say that anybody that came into trading in 2019 or 20 to now has probably experienced the same type of ups and downs that I've had in my career over all those years in a short amount of time. We've just had like shorter cycles and wilder movements. And I just think that if you cut your teeth in the market for the last 5-6 years, you've got plenty of examples to go off of. And then you can take that and say, yes, history doesn't rhyme, but it often doesn't repeat itself, but it rhymes. There's been a lot of rhyming the last 5 years that I can say that I've seen over my career the last 20 years. So you just keep trading. It's risk management. It's making good decisions. It's not all in on anything. So I know it's exciting to read, like, oh my gosh, if I only did this and I bought 1,000, call contracts on GameStop, I'd be crushing it right now. Well, but you didn't, and you shouldn't, because it's just, I went all in on Nvidia with the double leveraged ETF that just came out. Good luck. It's like trading is a game of attrition. You survive, try to make a bunch of money when it looks good, but it's all calculated risk. I think that's the only reason I've been here for as long as I have. It's not about it's not a YOLO, right? This is what I do, and it's just calculated risk. So all right, the US 30. So the Dow, yeah, we can go Dow. So this has been performing pretty well. This actually was one of my better positions for this last week. I did take profit on the US 30. Same thing as I mentioned earlier. Let me go to this chart here. So I go US 30. Okay, and I look at the technicals. This is the only thing that concerns me on the weekly time frame. We're coming up near all-time highs. Momentum and relative strength are disagreeing in a big way. So it's not actual divergence, but it is hidden bearish divergence. So what that means to me is we might test the highs, we might even breach those highs, but if we have divergence here, I don't see that momentum is necessarily on the other side of that trade. So I don't see us going to a new blowout bull market. I could see us getting up to highs, possibly having another correction, and then maybe getting back up to the highs. And this might be, I hope the rest of the year doesn't play out this way. I really do. I don't know. I guess I would just look to see if we go sideways for the summer. The next real catalyst to me is let's get through the election. Let's see the Fed, in fact, cuts rates, and then the markets can rip into Q4, Q1. That to me is an easier way to map this out than thinking like right now it's middle of May and this market's going to rip like no tomorrow. I don't know. I don't think that's really the play. So I'm a little skeptical. That being said, to me, I trade in 1 to 2 to 4 week windows. A lot of times my cycles are 1 to 2 weeks in the index plays, 30 to 45 days. A lot of my stocks. So I mean, my window is not super huge. I mean, sometimes I do leaps and I go out 12 plus months, but just different strategies, right? But I just think that it's just taking good risk and looking for some volatility. I think this week there's enough news and there's enough out there that the market can have something to work with, which is good. I want to see the market want to move, right? Not need it to move. I think there's enough out there that the market can want to move, which is a week like this, right? And then the NAS, yep, same thing here. I can go NDX or the NAS 100. Here you go. So same thing. I show the charts. You can see that we're creeping up to those all-time highs, hidden bearish divergence. And again, that doesn't make me a bear. The stock market, these ETFs are not like trading Forex. Just because I see divergence does not mean I short the market. It just means that if we get up to these highs, I would want to be protecting profit just in case we have a turn, right? Because if my broader market indexes turn, most stocks are going with it. Good, bad, and different, right? So I'm just a little cautious. I think we can get to the highs. That's the reason I took the trades going into this week's expiration. I think we can test the highs. But if I go to a daily time frame here, we've had a lot of gaps to the upside. You can see that we're leaving a lot of demand to the downside. We now have, I think we found some of these daily pivots. Let me go back to a smaller time frame here. I have a bunch of pivots on my chart, and hopefully my charts aren't sloppy. I can see through all this crap on my charts, and maybe it's difficult for you. But we have 1, we have 2. Third pivot was found, but we have, well, I guess it's not that bad. We don't have a ton of pivots available. So I think it just keeps plugging away. The news could be a little bit of a driver to help us get to these highs again. Market celebrates all-time highs and then just turns a little bit. So, the one thing I would notice, and we were spot on with this, if you are familiar with the NVIDIA gap that we saw, as the market went up here, okay, I believe that was, where the heck was that NVIDIA gap at? Let me go QQQ. Is that it? Let me go this chart here, and then I'll let you go. I'll post my Discord in just a little bit. This is the NVIDIA gap. This is the NVIDIA gap right here. Okay, did the market come back and fill it? Yes. Guess what this is? This is Apple. This is when Apple said, we're trying to buy the runway for our international growth to figure itself out, right? I mean, Apple innovations, maybe they get into AI stuff, and this is what's so interesting about the trend and the hype with AI. You're seeing big companies now, like Amazon for the first time mentioned AI this year, and Amazon's doing really, really well. Google, Microsoft, Apple, they start getting into the AI space. Market likes it. They big, steady tech companies can perform pretty well. I just think this is interesting that you have this NVIDIA gap. That price struggled to go really, really high without turning back and filling. We have an Apple gap right here. Price could struggle to go really, really high without turning. So I could see the market stalling here, having a nice stretch, having a turn like so, but I'd still be bullish at that point, and I'd look to see if we can make higher highs eventually. But if I had my way, this is what I would do. If I had my way, this is what I think the market likes to do. Come back up here, test the highs, make it a bull trap, and then see the market fill the NVIDIA gap or the Apple gap and see if we can come back to find some corrections. Because from this run, not much has changed right here. The Fed hasn't changed, right? The Fed is not all of a sudden cutting 5 times again. The market thought 6 to 7 right here. The market was dealing with, oh, no, they're going to go 0 cuts here. Now they're thinking 2. This doesn't change the narrative on how the market can be that much better. Yes, earnings are better. Consensus is solid. The Fed is accommodative right now, right? But broader market isn't showing super, super positive signs at this time. It's still the S&P 10. It's still the NASDAQ 10. The Dow 30 is only 30. So, I mean, you have a lot of companies in the broader market that aren't as solid, right? They're not performing as well. The IWM with 2,000 stocks is way underperforming the IWX, which is 200 stocks. If you go to the top 25% of all these indexes, the top 25% or the top 25 of these index holdings are crushing it compared to the broader market. So my point is, I don't see the market going this way. Not yet, right? Not yet. So this is why I'm cautious and protective going into these highs. I think we can get to the highs, but I think that's a bull trap. So I'm going to be protecting profits into those levels. Okay, it's 11:06. I've got to get to my equities on demand trading room. Before I go, I will post this in the chat right here. So my Discord is, I'll do this so it doesn't expire. New link. Here's my Discord. Okay. Oh, that's not what I wanted to post. Sorry about that. It looks like I had to spam the channel. My bad. Nice. Okay, let's try that again. Sorry about Discord channel link. There. Okay. That was a copy and paste from the stream. So there's my Discord channel. There's the 11:07 post. If you want to jump in, awesome. Free community. I get everything, like I said, all my content in one place. And I appreciate Nick and the team letting me on. James, I don't have to reach out to you and see, are you Helldivers guy? Because you're giving me all that soundboard stuff early on. So maybe you like the game if you played it. And if you do have it, cool. I think we should play. I liked it. It was first time yesterday with the PS5, and you know, I reserve it typically for Fridays, but my nephew's getting me more involved. Anyway, all right, I'll let you go for today. Equities on demand students, give me 3 minutes. We'll jump into 11:10. Let's continue on. We'll spot check our ETF trades, and I might look at another one out for a couple of weeks, so we'll figure it out. But everyone jumping in here at the Discord, awesome. Nice to have you all here. I'll post a couple messages, but that's what the free group chat is all about. Good stuff. Trading. Can I do trading SPX from India? Possibly. I mean, that's a broker question, not a me question. I mean, if you have a U.S. broker or you have the ability to trade U.S. stocks, most foreign brokers allow you to trade U.S. stocks. Yep. So I have a lot of traders that are in Canada, a lot of traders in Europe, a lot of traders in Australia, New Zealand, a lot of traders in Asia. They trade U.S. stocks. So it's very possible. Yep. Okay, cool. Thanks for being with us today, and happy trading lots of profits. We'll see you soon. Thanks. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to share free value to you, our audience, through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, Make sure to subscribe for more, lest ye walk the plank. Join our crew as we head out to go long on gold. See you next time.